Hi, this is Mani from bse2nse.com. So in this video I'm going to talk about a relatively safe strategy which you can use on the expiry week, and even beginners can do it on expiry week, and it's called Nifty option selling strategy. And this is making use of the fact that most of the out of the money or all the out of the money contracts are going to become zero on the day of expiry. So what we need to do is you need to do this on the week of expiry, Monday to Thursday, and Thursday you get the best returns and pretty safe returns on your capital. So what we need to do is the main part is choosing the strike price, number one. So choose the out of the money strike price where the open interest is the highest. So that's exactly the place where all the other sellers, the experienced sellers, are expecting that markets should not breach that level. So when the option open interest is maximum in a particular strike price in out of the money contracts, it just means that every seller, the overall sellers in the market are actually bidding that markets will not cross that particular zone, and the options premium of such a contract will also face a substantial amount of selling pressure. So that should help you while you are selling the options premium and to buy it back at a lower price. So again, for example, on Zerodha Pi, use the 5 minutes chart. Once you choose the strike price, it's about whether then you want to either short the call option or the put option. Now that again depends on your understanding of which way the markets may move on that particular day. For example, you can use a simple logic of on that particular day, if markets are above the day open, Nifty is above the day open by around close to 10 o'clock, then you can go for shorting the put option. Similarly, if Nifty is below its day open price by around 940, 945, then you can short the call option. So, and again, it's best on the day of expiry because on the same day it's going to become zero. Unfortunately, I'm not going to be able to show. Today is the expiry day of this month, and I did try it out, and we were able to successfully collect some premiums, and we were able to make approximately 3% returns in just one day. And unfortunately, I cannot show you the chart. Zerodha Pi is this is almost late in the night, and the charts are not in Zerodha Pi at this point, so I'll not be able to show you. But typically what you do is in the morning you load the chart and keep watching the chart, and once you see a double negative candle on the 5 minute chart, one below the other, then that's a good place to short in terms of entry point. And then on the day of expiry, of course, you can just hold till end of the day and let it go down to zero. Unless there's a drastic movement in the market, you will not have to worry about the exit point. And today what we did is we shorted 8300 put, which was around 7 rupees in the morning, like around 10:15, and in the end of the day it became zero, and we were able to collect per lot premiums of around 180 rupees. And the margin required to sell a lot in intraday, and you can sell it as MIS so that you can get extra margins. And let me show you the calculation here. So the premium was 7 rupees, and for Nifty, so 7 multiplied by 25, we were able to collect 175 rupees per lot. And you can do multiple lots so that the brokerage cost will come down, and in Zerodha anyway it's fixed brokerage per order, so it's only going to be 40 rupees both the ways, and taxes will be very less in case of options. And the margin required to sell one lot of Nifty with MIS is only 5,000 rupees, or around 5,000 rupees. So I'm going to divide 175 divided by 5,000 and multiply this by 100. So this is actually almost 3.5% returns, meaning if you have 1 lakh rupees and you're shorting 20 lots, you'll be able to short 20 lots. You can make approximately 3,500 rupees in a single day. So, and if you have 10 lakh rupees, you will be able to short and collect premiums worth 35,000 rupees. and if you short with a capital of 1 crore rupees, you can collect just 3.5 lakhs in one day. So it's pretty much stress free, and you can pretty much be sure that you will collect the entire premium unless markets are going to extremely move against you by around say 100 points. For example, today I will show the open interest here. You can see this, you can get this in nseindia.com. You can see that this is Nifty spot was today varying around 8370 to 8400 most of the day. And in the put option, you can see that in the morning also the highest open interest was at 8300 put, and morning itself Nifty was trading above its tray open price, so I chose the 8300 put to short. And the chart here that you get in NSE India is not exactly clear, but you can see that in the morning it was around 10 rupees, and then end of the day it dripped and dripped and dripped and became zero. So we went short somewhere here at 7 rupees in the morning at around 10 o'clock, and then we were always in the profits throughout the day. And after 1 o'clock or 2 o'clock, after markets were kind of moving up, the premium just went down to zero. So worst case, again, the good part is it's not going to eat your capital. Assuming, let's say you are having a capital of 1 lakh rupees and you're collecting 3,500 rupees in premium. Um, Even if you short at 7 rupees, and if the premium suddenly shoots up to 14 and you square it off at 14 rupees, you will lose only 3,500 rupees. So out of 1 lakh losing 3,500 rupees, your capital will still be pretty much intact, and you can continue to come back into trading again the next time, and you can recover it back pretty easily. Unlike other futures trading or options buying strategies, wherein your capital can kind of totally vanish in one trade, that kind of a thing will definitely not happen here unless you kind of totally pick it wrong, like you totally get the trend wrong, and Nifty moves 150 points against you and you do nothing, or you don't have a proper stop loss in place. So again, here today's day high was almost only 12 rupees in the morning hours, so 12 or 15 which was being traded. So when you're selling, you can definitely have a stop loss around that place. So that should be day's high should be a good level to put a stop loss for those who prefer going in with a stop loss. And again, on the upside, I can show you on the left the call option. Here you can see that the open interest is highest in 8500 call, which is again 100 points away on the day of expiry, and which was also pretty safe to short. But I went with the 8300 put again based on the logic that Nifty was always above the day open price today, so I went with the selling the put option. But you can also try and do like both the ways, wherein both the contracts you sell, allocate equal amounts of quantity, and short both the sides, and have a stop loss for each of it. So that way you most certainly will not lose your money at all. So again, unfortunately, I'm not able to show you the chart this time. I thought it will still be there. Probably next month I'll try and record a video again and show you the chart. And similarly, you can do this not only on the day of expiry, you can do it on all 4 days on the last week of expiry. Again, choose the strike price based on where you see the open interest is extremely high. So that's exactly the point where most of the sellers are expecting that Nifty will not cross that particular level by expiry. So that's pretty that's a contract that you can choose to short it. And for people who are pretty much experts in intraday trend analysis, you can do this on other days as well, not just the last 4 days of expiry. All through the month you can do it. Again, choose the out of the money contract where it's only the time value or the hope premium. So you can short it, and you will need to predict the intraday trend and the intraday movement. And even if you short it during a time when Nifty is just static, you will still be able to achieve targets of around 2 rupees or 3 rupees intraday, which should again be like 1% returns every day that you can make on your capital. So pretty much if you are pretty successful, you can even make 10% returns in a month. And in the last week of expiry, I would, in the 4 days, on the day of expiry alone, you can pretty easily make 3% returns. On the last 4 days, I would say you can make close to 5% returns if you do it, and if you can master it. And again, like I said, it's a strategy where you're not going to lose your capital totally, or like your capital is not going to deteriorate a lot unless you do something totally wrong. So it's a very good strategy to try it out, and paper trade in case you don't have the funds, and probably you can start with a lower capital of 20,000 and short 4 lots. Try it out, and if it works, then you can continue to do the same. Any comments, any questions, you can post on this video as usual, and I'll get back to you as soon as possible. Subscribe to our YouTube channel to stay in touch. Join us in Zerodha, and you can get a free training. More details on bse2nse.com website. Thank you.